All right. Here we are with Ryan Selkis, the CEO and founder of Messari, a famous and very well used, at least by myself and many others that I know, a platform for crypto data and research. Ryan, it's so good to have you here at the Defiant podcast.
It's great to be here, and always good to see you.
Yeah. Cool. So I definitely want to get to your background and how you got into crypto, as I usually do with my guests at the start of the show. But seeing how we have such an important news this week and these couple of weeks, and how you've been really outspoken about it, I think it's good to start out with the U.S. infrastructure bill that just passed the Senate yesterday. First, I want to bring listeners up to speed on it. If you can just kind of walk us through why this bill is so important to crypto.
Sure. So the quick background is there's a bipartisan infrastructure bill. It's a cornerstone of President Biden's agenda to pass. It's I think 1.2 trillion in total as part of the spending bill, and then this infrastructure component is a sizable piece of that. And there is one provision that was included over the weekend, just a couple weeks ago, that essentially included crypto not as part of the infrastructure bill, but as a tax offset. So how some of these provisions were going to be actually paid for in the broader infrastructure bill. An important component was figuring out what the pay-fors were going to be from different, new taxes or new fees, et cetera. And one of the areas that the Senate identified was cryptocurrency tax enforcement in the U.S., which I don't know how they arrive at that assessment or how they think about scoring that from a budget impact standpoint. But generally speaking, I think most people believe that the way that the language was written and in terms of the feasibility of the policy as written, it was just technically unworkable. They had expanded the reporting requirements for crypto brokers and included such an expansive definition of the term broker that it would have, basically applied to everybody that's facilitating crypto transactions. It could have been, peer-to-peer validators, anyone participating in a proof of stake system, any developer that's helping to create and advance protocols that are doing the same in DeFi. And there was wholesale industry support for improved language, since scrapping the provisions outright were not really an option because it was a critical component, according to the CBO that scored this. Again, we don't know how, to actually paying for the provisions in the spending bill. So there was an amendment process with two different amendments that emerged over the course of a week that were also bipartisan. And finally, those two parties did reconcile and come forth with an imperfect but workable amendment that wouldn't completely shut down the U.S. crypto scene. And ultimately, because of the Senate procedures and how far along the votes already were, it was blocked by a lone senator, 87-year-old senator from Alabama, that objected, not because he opposed the provisions that were being put forth, but rather he wanted to attach a defense spending amendment as a condition for not blocking the otherwise bipartisan amendment that would have fixed some of these really deep problems yesterday. A lot of folks have been up in arms, justifiably so, about how this has gone down, what it means for the industry. I'll leave a lot of that to the smarter folks on the policy side at Coin Center and the Blockchain Association, and folks can kind of follow along some of the crypto lawyers that have been outspoken about this. But the long story short is we've got a missing leg of the lobbying stool and DC political machine for crypto right now, and that's a grassroots member-led advocacy organization and lobbying group. We have Coin Center, which is a think tank. We have the Blockchain Association and a couple of other behind-the-scenes corporate-sponsored lobbying groups. But there is no voice to the tens of millions of crypto users in the U.S. That, frankly, I don't think the Senate or Congress in general really appreciated until this past week. And we saw some of that swarm descend on DC, virtually, especially on Twitter, thanks to crypto Twitter, and really, kind of, I think those senators kind of recognized they kicked the hornet's nest. And I think one of the paths forward here as an industry is not to start things from scratch or undermine or do anything, but invest more heavily in some of the groups that are working, like Coin Center Blockchain Association. But we do need to add that kind of third prong of attack, that third leg of the stool, to activate some of the more grassroots efforts across the country, and in particular focus on primarying or competing with crypto candidates in every level of federal election from here on out. Because the one thing that politicians respond to is whether they get reelected.
Okay, and so is that why you said you're looking to start this new organization, Digital Freedom Alliance? Is that what this kind of additional tool to work on in Washington is about? Just like a more grassroots, community-led organization?
Yeah, that's exactly right. And whether it's something new or whether there are other folks with political or lobbying experience that are already working on smaller initiatives that we or I in particular can just help back, support, and throw gasoline on the fire, happy to do that. I think the premise, though, is that we all seem to collectively recognize the power of the broad American crypto community, and there just needs to be a channel for that community to actually have its political voice heard. Money is not going to be the problem. Enthusiasm certainly is not going to be the problem based on what we saw this past week. So how do you channel that in the right way and do the impossible, which is align all of the warring tribes in crypto around one advocacy group that's basically going to be very black and white. And I've compared it to another political party, right? That is bipartisan, almost a questionnaire or crypto purity test. Are you on our side? Do you even understand the technology? And have you made steps to get informed about this entire ecosystem, or haven't you? And we're going to support candidates that have done the work, or your opposition.
Okay, so is the idea that this group will help mobilize voters in the crypto community to support candidates that are pro crypto with funds and votes?
Correct.
Is the goal. Okay.
I should have one. I should add one caveat here, which is I think that this is a catalyzing event for the whole American crypto ecosystem, particularly the individuals that want to get involved here. But a lot of this ideation was happening in real time. So I don't want to pretend that we have an entire organization that's already been built, everything from the name, the general structure of an entity like this, what the kind of core ethos and tenets and mandates would be. All of that was more or less happening in real time based on both public feedback and some of the private conversations that I was having as a result of the pickup of some of these tweets of mine that were kicking the hornet's nest.
I mean, it certainly seems that it's something that's just very, very necessary and needed in Washington. And just like judging from how quickly everyone in crypto mobilized, and like you said, regardless of the different kind of factions that there are in this space, of course, like everyone can agree that crypto needs just friendlier regulation for the industry to continue thriving in the US. And this bill just does the opposite. And I don't know. And just like to get into more like the specifics on what the actual threat to this bill is, or that this bill does to crypto is essentially requiring, like you said, a very kind of broad array of people. Because like this definition of broker isn't so well defined that it can include even a crypto developer. to pay taxes on transactions. But the implication here is that they also have to collect a lot of information on users on cryptocurrency platforms, which in the case of DeFi makes, decentralized applications like really just unworkable, impossible. Like it makes it impossible for DeFi applications to really comply for this regulation because of the way that they are built. There's no information that developers can compile from their users. So
yeah, and I think that's the issue. It's not that this was a new tax. It's not that this was a surcharge on exchanges. It's not that we're asking for preferential treatment from a tax policy standpoint. It was quite literally an impossible ask from the language of the bill that is now subject to interpretation from whoever is ultimately going to be responsible for the rulemaking and how this gets implemented. But you can't just assume that the regulators will get it right during rulemaking because the statute, it says what it says, and right now the language is just completely unworkable technically, and its most extreme case could push developers and some of the top project contributors overseas. Which is counterproductive, most likely from a tax policy standpoint. Anyway, so right. I think there's still paths to reconciling this because the bill now has to go to the House of Representatives, and I think that's where most of the attention is going to be focused the next couple of weeks, is in reconciling some of the gaps here. And of course, there's already a bipartisan letter in support of implementing fixes to even to the amendment that was proposed at the 11th hour by this small group of senators.
So, I mean, to be clear, it's like hope is not lost. Like there's still the House, there's still the Supreme Court if it comes to that. It's not like crypto in the U.S. is ending right now.
Well, no, I mean, crypto. I don't. The good thing about the American system of government is dysfunctional as it is it's very slow. So this isn't like China. China is not necessarily a place that I would want to live, but the CCP is very effective when it cracks down on something, and we've seen that with the crackdown on Bitcoin mining and the exchanges, and frankly, China gearing up for the rollout of its own e-money, the DCEP currency and payment system. On the other hand, we have some of the shenanigans that we saw this week, which slow things down and leave plenty of time for well-informed folks, not only in the kind of lobbying end to do their job, but also for some of the staffers that actually have done the work and understand how these technologies work to fix some of the errors that were kind of passed at the last minute here.
Yeah. So, I mean, it's a system where there's just like more checks and balances and just like opportunity to correct course. So that's a positive for sure. Okay. So now, back to your story. Like I said in the beginning, you lead this kind of very well recognized company. You founded Messari, and you've been in crypto since around 2013, I understand. Mm-hmm. But I think not many people realize that you were in the traditional finance side before that. So I just love to learn more about your background, like where you came from and what got you interested in crypto in the first place.
Sure. So I've talked about this a little bit. I actually wrote a thread on it earlier this week. But I did start in investment banking and then venture capital out of school. Realized pretty quickly that I wanted to be on the other side of the table for all the entrepreneurs that I was cold calling back then as a junior VC associate, and started my first company in 2011, focused on the payment space, but well outside of crypto. That happened to be my first introduction to Bitcoin. That summer, there was something that some people might remember, the debt sequester in the U.S., which was another example of complete gridlock and dysfunction in D.C. At the time, the Congress had a similar issue with a spending bill where they were going to implement across-the-board cuts to every aspect of government spending unless they could reach some type of decision by X deadline. And it was called the debt sequester. And of course, they blew through the deadline and then they moved it back and then they essentially just ignored it forever. So there was no real consequences for the dysfunction. And after that time, S&P downgraded the U.S. debt for the first time ever from AAA to AA. So at the time, there was a few ways to play that if you wanted to bet against DC and kind of bet on ongoing government gridlock and dysfunction. You could buy gold, which is kind of like the classic gold bug thesis and hedge that we're spending too much money, we're running up too much deficits, you need hard money. And there was a lot of overlap between those folks and the early Bitcoin crowd. Then there was, you could short the dollar or short treasuries in particular, or you could buy Bitcoin. And Bitcoin was kind of the new player on the block. At the time, though, you had to basically be a developer or someone that just really understood the tech to get involved. And I didn't pay that close attention to it, unfortunately, because it just seemed a little bit too Wild West and under the radar to really spend time understanding. Shame on me. Fortunately, 2 years later, I got reintroduced to Bitcoin. Fred Wilson invested in Coinbase. Winklevoss twins came out with their ETF proposal, and I was winding down that same startup. All of a sudden I had some time on my hands and kind of fell down the rabbit hole. So I became an independent analyst, broke the Mt. Gox story back in 2014. So pretty quickly got to know everybody for better and for worse within crypto. That ultimately led me to join Digital Currency Group as part of the founding team there, where I was working on seed investing for the first couple of years. And then after we built out the team and raised a round of funding, I flipped back over to the operating side of the business when we acquired CoinDesk, and I ran that restructuring. So between those kind of first few roles within crypto, and then obviously starting Messari, I might be one of the only people, if not the only person in the world, that's sat at all four of those seats at the same crypto information table between actual analyst, investor, media operator, and now building data products.
That's super interesting. I'd love to just go back to you breaking the Mt. Gox story, because you glossed over that, but I think that's so interesting. And it was the biggest story in crypto and blockchain at the time. And you had this kind of independent blog. I guess if it was today, it would be maybe a Substack newsletter or something. But how did that happen? How did you get that story? As a reporter, I'm interested.
Yeah, I mean, this has happened a few times. I mean, it actually just happened yesterday because I actually knew about 10 minutes before Senator Shelby actually blocked the vote that he was about to block the vote. And I was kind of furiously trying to get the details right from the source that I had in D.C. to actually get that information out before he actually took the floor. And unfortunately, it was just too late. But I think because I've never been an actual journalist and I don't have the same rules or editorial oversight, I guess, or maybe self-preservation skills, if you're being a cynic, to not shut up about those things. There's been a few times where I've had information like that fall into my lap and just acted on it. So Mt. Gox was certainly the most extreme example. But that was an instance where, people knew that I was well connected and that I had a small platform. And more importantly, that I would run with it and that they could, trust that their identity wouldn't be leaked as kind of the source of those documents. So, because remember at the time, CoinDesk was only about, 6 months old. and there wasn't really any kind of crypto media to speak of. So I was probably the closest thing to like a friendly outlet that could have gotten that out in the wild without it just being and gotten it out quickly because there was a real time sensitive elements to that they're announcing bankruptcy, like basically within 6 hours, I think was the when the market would have opened in Japan.
Oh, wow. Okay, that's so interesting. All right, and then so back to kind of the third of the story. You were investing. You got into crypto through investing in different startups, and then with the digital currency group, and then like getting on the operating side of CoinDesk. In this period, and I guess through now, you've invested in over 20 startups. I'd love to get some of kind of the lessons that you've learned, and what do you look for in founders or in projects when you're considering whether to write a check?
Sure. So there's been, just to be, kind of clarify, there's been different phases of my investing. So when I was investing at DCG, this was 2014, 2015, and that was a lot of equity investments, a lot of infrastructure. So some of the early global exchanges that are now kind of regional epicenters for their own crypto industries. When I was running CoinDesk, I was not investing. And when I, for the first few years running Messari, I was also not investing, because in both those cases I was focused on kind of building, or in CoinDesk's case, rebuilding on the operating side. So I started angel investing again end of last year because it's become obvious that one of the things that I think it's just strategically valuable for me to do, just running a company within crypto, is using that as like a business development tool as well, and kind of tightening up partnerships and other alliances that could be not only interesting investments for me as an angel investor, but potentially interesting from a partnership perspective with Messari. So again, I've probably looked most closely at other data infrastructure companies, other NFT and DAO infrastructure companies, and then of course I've done a little bit in terms of DeFi investments as well. But more often than not, there's always some strategic value that people can use their imagination and think how we might be thinking about alignment with Messari long term, but it's really a broad mandate, and I just look for good teams that are executing and that have a good community of backers. I'm just along for the ride, and hopefully punching above my weight as an individual in their rounds.
Nice. Oh, I see. So, it's an interesting way to look at it. It's like your investments are kind of instrumental to Messari's growth as well. They're like strategic for Messari in the long term. It's cool. Okay, so about Messari, what led you to start that company?
So this is back in 2017. The ICO market was on fire. Q4 2017, for those that were around, was a pretty wild time. It was surreal how vertical everything went, and the real genesis of the company was my co-founder Dan and I wanted to short the ICO market because we just saw the valuations, and eventually you recognize you don't want to short it, but you probably would want to buy options that would give you the downside exposure. And as you start kind of going down that rabbit hole, there's not enough infrastructure in place for actually shorting the market. There's not enough derivatives infrastructure, and some critical inputs to that infrastructure is just reliable data feeds and reliable reference pricing for all these assets that were basically going vertical on very limited liquidity. Some listeners might remember DentaCoin. as kind of the meme coin that was, $1 billion cryptocurrency for dentists. And that was just kind of the environment we were in. So when we took a step back, we recognized that the more interesting long-term opportunity was not in shorting all these overvalued assets, but instead building the data architecture and the ingestion engine to actually help people discover, diligence, and ultimately participate in these new protocols and own these assets that actually had some fundamental value underpinning them. So first year after we formed the company, it was a straight shot dome from 20,000 to 3,800, and the euphoria dissipated from the market. We kind of flipped on a dime. A lot of folks washed out. A lot of people turned over within the industry, and we kept building and built out a really valuable market intelligence platform that now covers long form research and profiles on these assets, dozens or hundreds of data points depending on which asset you're talking about. And then in events and governance alerts system that is used by now several hundred enterprises that covers several hundred of the top protocols and their assets. So we're continuing to double down on that market intelligence platform and continue to build data tools and research tools for the crypto market and crypto native professionals. But we're also starting to see much more institutional interest, as you can imagine, as big banks, big funds start to look beyond just Bitcoin and Ethereum. And even if they're not investing yet, they're at least getting smart on DeFi and Web3 and basically where are things heading next in this cycle, and how can they position their companies to be competitive in this market.
Very cool. So, I mean, I'd love to get your thoughts or your experience on how it was like to be a founder building just like a newly, launched company in crypto, like in the bear market. How did you kind of, I don't know, make it through? And I'm sorry, like, did you start Messari with your own capital? Had you taken on like outside investment at the time?
Well, we raised some money in 2018, mostly to get some of the top crypto investors on board as partners, and almost like as an extended business development team. We want to have a good global reach, and part of the reason for that is we wanted to be very closely connected with as many global token projects as possible. Beyond just our kind of limited window in New York, and with our relationships in the U.S. in particular. So we ended up raising from about a dozen crypto funds, many of which have gotten significantly larger, as you can imagine, since then. But it was a small round, and then we added a good contingent of investors in a seed round in 2019.
Okay, so you were still able to raise in like during the bear market, so at least it wasn't that bad.
When we raised money in January of 2018, that was pretty much the height of the market, right when we had the idea and when we first launched. In 2019, that process took a long time and it was very painful, and we had more than one near-death experience in 2019. But at the end of the day, we pulled out through to the other side, and with this fundraise, the Series A that we just closed and announced last week, we've that whole process cover to cover was about 3 months from when we decided to raise, and about 2 months cover to cover from first meetings to final close. So just a markedly different fundraise environment and results versus where we were in the bear cycle, for sure.
And this latest round is so interesting because, I mean, it was this huge hedge fund, Point 72's first crypto investment. I'd love, like, if you can just like get some of that color and backstory on how you got them interested.
So just for kind of minor clarification, Point 72 is a really large hedge fund and asset manager. The investment and kind of new partners we took on were actually Point 72 Ventures, which is an affiliate venture-focused fund, and it was their first crypto investment. So I think one of the nice, if unintentional, parts of our story as a company is we have served now as the first entry point for two very strong traditional investors. One in Encore Capital, Jeff Clavier from out of Silicon Valley, and the founder of Encore Capital joined our board in 2019, and it was his first crypto investment. He's made one or two additional investments since. And then Adam Carson from Point 72 Ventures joined. Obviously, it's their first investment, and I think in both cases, those were not necessarily crypto native investors, but they were interested and wanted to have a good kind of strategic foothold in the market because they understand and know how to grow picks and shovel businesses. Neither one of those organizations was necessarily going to invest in like the next DeFi token, nor were they structured to do so. But I think general thesis was, if the crypto market does well, what are the infrastructure businesses that will do well? And within the information vertical, obviously we're one of the higher growth companies in that space, and have a significant amount of upside ahead.
Very cool. No, congrats on that. Wanted to talk about your end of year report, which I think it's. How long have you been doing that? Just like I think I've read like the two past ones maybe, but I think it's become like something people kind of look for.
I think I've done 4. The first one started as a tweet thread. And then turned into kind of a short report, but they were mostly tweet length bullets. The next one I was front run by Arjun from Paradigm, who dropped his on New Year's Day, as I think he knew I was working on mine and was about to publish mine a couple days later. And his was very good, so I kind of took the wind out of my sails that year. So I don't count that one. And then the last 2 years, I've written it as a capstone report of sorts for all of the other research that our team has done at Messari. It takes a long time. I'm not sure if I'll have the bandwidth to do it again this year, but we'll see.
So I wanted to talk about some of the calls you made. I mean, we're more than halfway through the year, which is crazy. But so far, like which calls in your report are looking to be right and wrong?
Well, you're putting me on the spot because there's 120, so there's a lot.
I guess there's a lot to
like choose from.
The headlines.
Yeah, I mean, I don't know if you want to be more specific or just kind of call me out here. I think the general thesis that institutions are coming and we've kind of crossed the chasm in terms of adoption and awareness. I think that's proven to be true. I think more corporate treasuries, more large financial institutions, and more of their clients, importantly, are very seriously considering Bitcoin as a portfolio hedge or at least some component to any balanced, credible, large investment portfolio. That was something that started to pick up steam around kind of middle of last year. We knew it was going to be a big theme this year as well. And sure enough, MicroStrategy has been relentless in terms of buying Bitcoin. Obviously, Elon Musk and putting Bitcoin on the Tesla balance sheet was a big story. And it's no longer even news when you hear a large institution or institutional investor actually make their first purchase or integrate with another crypto company to support some type of crypto service or clientele. So I think the big kind of directional bet that we're still in a bull market at the end of last year was not obvious, because I think when I wrote the report, we were trading somewhere in the teens for Bitcoin, and then obviously we went up 4 times from there. I also think that this most recent dip, I'm actually more excited than ever that not only is the long term prospects pretty bright, but it feels like there's still quite a bit of room to go in this particular cycle. So I don't think that we've already seen the top and things are going to fizzle out, or it's going to be a long sideways market. Although I'm personally prepared for it because I've lived through it a couple of times. I think that kind of directional enthusiasm for this year and the duration of this bull market is something that's held up well.
I think you had the call of Bitcoin at 100,000 by the end of the year. Mm-hmm. Do you still think that that's going to be the case?
I mean, everybody puts out price predictions, just for it's everyone's favorite parlor game. Mm-hmm. I don't know. I certainly think we could hit it. We're running out of months, but it doesn't take that long for the markets to rally and for Bitcoin to go from 40-something thousand to 100,000, and we've seen that historically. It moves at lightning speed once momentum starts picking up. So there are definitely signs that that could be the case. I think the more interesting asset right now, and obviously the more interesting narrative, is around Ethereum and kind of everything that's happening with the upcoming switch to proof of stake, 1559, the explosion of DeFi and continued use of Ethereum as the reserve currency for all of decentralized finance to a certain extent, at least in terms of like settlement. So that I think I've historically I don't want to say underestimated, but I've been underweight personally Ether until most the last couple of months, in which case I've caught up quite a bit. But part of that is narrative driven. Part of that is the circumstances has on the ground have changed, and it seems that many more institutions are warming to Ether than were first interested in Bitcoin, because there's some underlying economic activity that people can kind of wrap their heads around.
So you're saying your exposure to Ether has now caught up with your Bitcoin exposure. Where is it? Are they equivalent, or are you do you have more ETH than Bitcoin at the time?
I'm no longer underweight ETH. I'll leave it at that.
And that's kind of relative to just like its market cap, or okay. So I guess you still own more Bitcoin
for now.
For now, do you think with all the activity on Ethereum, I mean, do you think it'll outperform Bitcoin? I don't know, this year.
I honestly have no idea. It's the risks that were presented in this infrastructure bill, going back to the early part of the conversation, would seem to have a larger negative impact on Ethereum, at least temporarily. But I generally think that there's just too much of a groundswell of support for Ether, for Ethereum, in terms of all the new applications that are being built and where all the market activity is happening. I'm equally bullish on both communities. We'll see how they perform from a real returns basis.
Yeah. Okay, and then I don't know what has been the most surprising to you so far this year, and if you want to tie that to your end of the year report, I mean something that you weren't expecting or that you got wrong.
I think on NFTs are interesting, really important, primitives, and I'm super excited about that infrastructure that's getting built out. And invested in a few companies that are focused on the infrastructure side. OpenSea, Upshot being two of them. I haven't invested really in NFTs themselves because I don't understand the collectibles and virtual games markets the same way I don't understand like the legacy art market. And so I have, but I do understand that the infrastructure that supports that is going to be here to stay and very kind of critical to the evolution of that. Anything related to the NFT market. So I don't know that anybody at the beginning of the year would have predicted that you'd have pixelated JPEGs that people throw up as their Twitter avatars, and those proprietary digital rights to those same avatars would be trading for millions or tens of millions of dollars. So that certainly is one of those like crypto bubbles that we know is not sustainable, but it's going to go through its own kind of little mini hype cycle. I just I never possibly could have imagined that we'd see that much in kind of the NFT market in particular. ICOs made sense from a hype cycle perspective. DeFi made sense from a hype cycle perspective. Even if they were overvalued, you kind of understood, where the real value is going to be. But NFTs have just kind of blown my mind for sure. So if I'm still waiting for someone to properly explain the sustainability of NFTs to me, but I guess I'll just have fun staying poor because I've been on the sidelines for quite a bit so far.
Interesting. Okay, so you think it's a bubble, and you don't see kind of like maybe as much long-term value in NFTs as like I guess like some of their supporters or advocates or investors.
Well, I don't want to go that far. I definitely think that there's a lot of long-term value in digital collectibles and kind of digital, provable IP rights over digital assets. I think it's just like anything else. It's probably a market that's getting too hot too fast, and those asset prices will correct. But that's not to say correcting from some of the insane levels that we're seeing today does not necessarily mean that the market's going to zero. It just means that it's going to settle at a new higher low, and then it will get built out more slowly and surely over time.
Yeah, makes sense. Okay, and then on DeFi, first, like, are you investing in tokens, using DeFi protocols? Like, what's your experience with this space?
Yeah, I've been investing in DeFi since last summer, but I generally buy and hold and focus either earlier stage or just on holding long-term investments for a pretty simple reason. I've got a day job that keeps me pretty busy, so just keeping up with everything. I tend to take my cues and learn a lot just from the Messari team and what our analysts are digging into every day. I'm almost converted on NFTs, but I just don't really have time to execute a trading strategy. So I think again, thinking about like long-term bets and long-term infrastructure is just generally been my strategy. Otherwise, almost all of my time and attention is going into just scaling out the actual product that we have and team that we have at Messari.
What are some of your long-term bets in DeFi?
I don't know that I should answer this. Just I'm not sure. I'm not sure how much book talking I should be doing in this format. But I will say I've invested in some of the top decentralized exchanges because I just believe strongly in the Uniswap, Sushi, 0x, the emerging DEXs. I think are going to consume a sizable percentage of trading activity long term, and they'll rival some of the large centralized exchanges. I think both are going to exist, basically in perpetuity, because people will always want collapse services that the likes of Coinbase or Binance offer, but and not have to worry about custody, things like that. But I'm hyper bullish on DEX. I have been for a while. Even dating back to the 2019 theses when we were in a much different market environment, and then I think the major lending and asset management protocols are all interesting as well. So what Compound and Aave are doing, and then what Yearn has been able to accomplish the last couple of years. I'm pretty bullish on. So across the board, I'm still stuck in the November of 2020 investing camp of owning the blue chip DeFi assets, and my plan is just to hold those ETH, Bitcoin, and then a portfolio of angel investments for the next several years.
I mean, sounds pretty solid strategy to me. So to wrap up, what's next for Messari? What's the long-term vision? What are some of the exciting things that you are working on now?
Mm-hmm. We talked quite a bit already about the core market intelligence platform, the research and data services that we've been building basically for 4 years. When we zoom out, though, I think there's a massive opportunity in providing enterprise level information services, not only to institutional investors and kind of crypto exchanges and infrastructure companies, but to decentralized organizations themselves. And I think we're just starting to see the very kind of early stages of a DAO services market emerge. Where people are trying to answer the question, how can you actually scale a community? How can you scale a decentralized protocol and make it ensure that the community is able to scale and the rewards from that protocol are distributed fairly. The 1.0 of that is, how do you reward your users for participating in the network? You can either give them airdrops, or you can reward them for providing liquidity through yield farming, things like that. But we're getting to the point where DAOs have sizable treasuries now that they can allocate for strategic initiatives, and some of that is going to go towards developers. Some of that is going to go towards kind of business partnerships. Some of it just has to go to people, right? There are people that need to fulfill marketing functions, IR functions. They need to build data dashboards. They need to fund lobbying, as we saw with the DeFi education fund. So how those funds ultimately get spent, what services are ultimately fulfilled, and then how treasury spending is monitored and performance is monitored for any vendor that's fulfilling services for a decentralized protocol and organization. That's ultimately the combination of a talent network and an information product, right? The information product, you need the benchmarks, you need to understand how these treasuries work, how effectively they're being managed, and just generally, what the best practices are around spending money for different discrete tasks. And then you need to actually just identify the individuals that are capable of being hired, and have some type of reputation scoring system so that a decentralized community can ultimately hire people more effectively. Because if every single time you want to hire someone to write a research report or to build a data dashboard or apply for any type of funding, and it becomes an ecosystem-wide proxy vote, it's just not going to scale, because you're never going to have people that are opining on every single micro decision that these decentralized organizations are responsible for. So I think about that as the next kind of big area of focus for us. We've got a really high growth, sustainable business just on the core data and research side. But so many of our existing customers and data partners are these DAOs and token creators. that more of the enterprise management and diligence tools are going to be geared towards those entities and their communities, not just our traditional finance counterparts that are used to paying for Bloomberg terminals.
So would this be a way to track how DAO treasuries are spent on, like, with Messari data? Is that what this would look like in practice?
Yeah, that's the lowest hanging fruit. But I think we have a massive community of analysts that have been working with us through our analyst hub, and essentially the V1 of that is building a decentralized sell-side research army that's going to do all of the ongoing coverage and produce the equivalent of the quarterly reports for these decentralized organizations. Those same analysts, though, can be very productive service providers or contributors to these DAOs for things like risk scoring treasuries and treasury management policies, fulfilling marketing duties or investor relations duties, serving on grants committees, serving as governance proxies, doing all of the things that don't scale and that you cannot automate, that require some type of reputable human eyes on and decision making on. All of those, I think, are things that can ultimately run through the marketplace that we're building, and almost all of those decisions are going to be powered by some of the data and research that we already have for these same end organizations. So they work hand in hand. Everything that's going on with a specific DAO proposal through our governance tracker. You understand what the benchmarks are, what the typical behavior is for other entities in the same sector that are of similar size, that have similar size treasuries, and you can actually figure out, not only what best practices are, but who's performing well within these communities of service providers that cater specifically to DAOs. So we're very early here, but I think DAOs are going to start to spend a tremendous amount of their treasuries as these tools emerge that make it easier to unlock them.
Yeah, I mean, there really needs to be just like more benchmarks and transparency on how on what these DAOs are doing, how they're spending funds, because it's ironic. Like a lot of these platforms, like the information is out there, but there's like very few of us like tracking all this. So will be great to have all that data and information out there. Okay, and then finally, 10 years from now, how do you see Messari?
It's going to be it'll be a lot bigger, and I'm sure more components of it will be decentralized. So if you think about our products in a nutshell, we have this tremendous data ingestion machine that can pull on-chain data, markets data, third-party APIs, events data, from social media or kind of any third-party news source. And then we've got front-end tools to visualize them, and then we've got a community of analysts that are ultimately responsible for putting them all in context and actually writing up the reports that make it easier to digest. That kind of core data ingestion infrastructure is what we're going to be hiring a ton of engineers to help build out over the coming quarters. The front end tools, same thing. We'll build some of those ourselves. Others, I'm sure, will be built by third parties, leveraging the same data set. And then on the analyst side or the contributor side, there's no way that we will own that entire market. So what we're trying to do instead is we're trying to open up as much of that information as possible and ensure that it's possible for a community of contributors to actually leverage our tools and these data inflows that we have, and ultimately build out the full investor relations or kind of community education library so that it's easier to access these protocols. I think ultimately that looks like some combination of a Bloomberg terminal and a talent marketplace for white collar DAO contributors.
Oh, very cool. Okay, so like the decentralized part will be the talent and like content, like research, creation side of the business.
Any services that could be provided to a DAO. The easiest one for us to start with is research coverage, because we're already a research company. But it just so happens that analysts make very productive workers in sales and accounting and finance and marketing and kind of across the board. So I think about it as like the non-technical, non-development spend for decentralized organizations. Hopefully a sizable percentage of that runs through Messari long term.
Very cool. I love how your focus is on DAOs, on like providing services to DAOs and not necessarily to just like traditional firms. So yeah, very kind of forward.
It's a little bit of both by design, right? So I think some of this information can be repurposed, but it's also what makes our business more resilient in the event that we have pretty sizable corrections. Or if we have some regulatory setbacks or things that would otherwise slow the market down. We already have this core, the subscription core that is more focused on non-DAOs and the exchanges, custodians, traditional investors, and then on the other hand, we've got this other marketplace that we're building that's got tremendous potential, and basically is our kind of long-term bet that in 10 years DAOs will replace many companies. And getting ahead of that, how do you build the tools and communications architecture to not only ensure that happens, but ultimately help provide the talent and fuel to staff those organizations and communities.
Very cool. Super strong vision. All right, Ryan, it was a pleasure chatting. Thanks so much for taking the time and for coming on the podcast.
Thank you.
Fun.
Yeah, always a pleasure, like I said, and excited to see you in just a few weeks at Mainnet.
Yeah, see you all in Mainnet, all of you listening. All right, thanks again.
Take care.